The charts are flashing red, and a critical line in the sand has just been crossed. Analysts are dropping their alerts. The price action is whispering a dangerous trend. But what am I even talking about? Well, let me explain. Shiba Inu has just suffered a sharp 4.1% drop, failing to hold a key support level that many believed was unbreakable. This isn't just a dip, it's a warning sign that a new wave of selling pressure could be on the horizon. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The focus today is squarely on the technical landscape of Shiba Inu, which is currently under significant pressure. The token has experienced a sharp decline of approximately 4.1% in the last 24 hours, a move that has pushed the price back toward the lower end of its recent trading range. This price action is particularly concerning because it represents a failure to hold a critical support zone that has been tested multiple times throughout December 2025. According to technical analysts, the inability of the price to sustain itself above this floor suggests that the buying power that has been propping up the market is beginning to exhaust itself. The broader crypto market has also seen a general sell-off, with the total market capitalization dropping over 4.1%, which has amplified the downside move for Shiba Inu. This confluence of technical weakness and negative macroeconomic sentiment creates a precarious situation. The question is whether this is a temporary shakeout or the precursor to a deeper correction that could see Shiba Inu retest its yearly lows. The current environment is characterized by high volatility and a clear struggle between persistent sellers and cautious buyers, making the failure to hold key support a pivotal moment. The core event is the 4.1% price contraction that occurred over the past day, as reported by multiple market trackers. This move saw Shiba Inu trade within a tight daily range, fluctuating between a low of approximately 775 units and a high of 821 units. The key takeaway is the clear presence of sellers at every attempt to push the price higher, a sell the rally pattern that is a classic sign of a bearish market structure. The failure to hold the support level around 780 units is the most significant technical development, suggesting the market has accepted a lower valuation. Furthermore, the news of a key Shiba Inu engineering manager announcing their departure from the team has added a layer of fundamental uncertainty, contributing to the negative sentiment. The combination of technical breakdown and negative fundamental news has created a strong headwind for the token. The market's reaction to the drop has been one of heightened caution, with trading volume showing a moderate increase, indicating active participation in the sell-off. As per on-chain data, Shiba Inu is currently trading at approximately 781 units. The 24-hour trading volume, according to data from major exchanges, is approximately $131 million. This volume is significant because it confirms that the price drop is not merely a low liquidity event, but a move backed by substantial trading activity, primarily on the sell side. The market capitalization of Shiba Inu, as reported by data aggregators, stands at approximately $4.6 billion. The decline in market cap reflects the erosion of investor confidence following the support failure. The psychological impact of the 4.1% drop is profound, as it negates small gains and reinforces the prevailing bearish narrative. Analysts note that the immediate price reaction is a test of the next lower support level, which is now the focus for both bulls and bears. The sustained selling pressure suggests that the market is prioritizing risk management, with many short-term traders choosing to exit their positions. The lack of a strong, immediate bounce back indicates that fresh capital is hesitant to enter the market, preferring to wait for a clearer sign of a price bottom. The technical evidence paints a clear picture of a market firmly in the grip of sellers. On-chain data and technical indicators confirm the severity of the recent price action. Technical analysis shows that Shiba Inu remains firmly below the 7-period smoothed moving average, SMMA, which is currently acting as a dynamic resistance level around 784 units. The downward slope of this moving average reinforces the short-term bearish trend. Momentum indicators are also signaling caution. The Chande Momentum Oscillator is currently near a reading of A-34, which, while not deeply oversold, clearly suggests that sellers maintain the edge in the market. A shift to a bullish trend would require this oscillator to cross above the zero line, a move that seems distant given the current selling pressure. Furthermore, the average directional index, ADX, is elevated, with a reading around 38. Analysts note that ADX readings above 25 typically imply a strong trend. Since the price is moving down and momentum is negative, the high ADX reading supports the idea that the downside move is strong and well established, not just a minor fluctuation. On the futures front, data is equally bearish. Futures flows show net outflows persisting across the 12-hour, 24-hour, and 3-day timeframes. This means that more capital is being withdrawn from futures positions than is being added, a clear signal that professional traders are broadly reducing their exposure and betting against a near-term recovery. Analysts note that the implications of the 4.1% drop and the support failure are significant, pointing toward a potential continuation of the downtrend. Expert commentary suggests that the failure to hold the key support zone around 775 units to 780 units opens the door for a move to the next major floor at 770 units. This move is critical because a sustained break below 770 units could trigger a cascade of stop-loss orders, accelerating the selling pressure and potentially pushing the price toward its yearly lows. The analysis is compounded by the news of the developer exit, which adds to the narrative of internal instability within the Shiba Inu ecosystem. This is a crucial factor for long-term investors who prioritize project development and team cohesion. Potential outcomes include a period of prolonged consolidation at a lower price range, or a sharp capitulatory move down if the next support level fails. However, a counter-bullish signal is the recent massive spike in the token burn rate, which surged by over 1,500% in the 24 hours prior to the price drop. Analysts are struggling to reconcile this deflationary signal with the bearish price action, suggesting that the immediate selling pressure from existing holders is overwhelming the positive effect of the burns. The current situation is a classic example of market uncertainty, where technical weakness is battling a fundamental deflationary mechanism. The Shiba Inu community's reaction to the price drop is a mix of concern and typical buy-the-dip optimism, but with a noticeable undercurrent of anxiety. Social media platforms are seeing a surge in discussions, with many community members expressing frustration over the token's inability to sustain a rally. Community trackers show a significant increase in posts questioning the project's direction, especially following the news of the engineering manager's departure. This high-profile exit has led to speculation about the health of the development team and the future of key projects like Shibarium. However, the core of the community remains resilient. Prominent figures are actively encouraging holders to view the drop as a buying opportunity, emphasizing the long-term potential of the ecosystem and the recent spike in the burn rate as a sign of future scarcity. Developer hints from the Shiba Inu team have been minimal in direct response to the price drop, but the focus remains on continued development. The team's silence on the price action is interpreted by some as a sign of confidence in the long-term roadmap, while others see it as a lack of immediate concern for the token's short-term performance. The increased social volume is a key metric that analysts are watching, as a sharp increase in negative sentiment could signal a final capitulation, which often precedes a market bottom. For now, the community is at a crossroads, with the technical charts suggesting caution and the loyal base preaching patience and accumulation. The technical forecast for Shiba Inu is now heavily dependent on its ability to defend the next critical support level. In the short term, 1 week, 1 month, the price is expected to remain volatile, with a bearish bias. Analysts predict that the price will continue to test the immediate support level around 775 units. A decisive break below this point, particularly if accompanied by high volume, would likely lead to a rapid move toward the next major support at 770 units. On the upside, the token must first reclaim the dynamic resistance of the 7-period SMMA at 784 units and then break through the psychological resistance at 793 units to signal a short-term reversal. For the long term, 3 months, 3 years, the forecast remains cautiously optimistic, but contingent on the project's utility. Long-term price models, including those from AI-based forecasts, suggest a potential for Shiba Inu to reach a maximum trading value of around 1,550 units by the end of 2026, driven by the utility of Shibarium and continued token burns. What to watch in the coming weeks is the behavior of futures traders, as a flip from net outflows to net inflows would be a strong technical signal of a market bottom. Additionally, any major positive news from the Shiba Inu development team regarding Shibarium's adoption or new partnerships will be a necessary catalyst to overcome the current technical weakness. A balanced opinion on the current situation requires a clear-eyed assessment of the risks versus the underlying potential. The primary red flag is the technical breakdown, confirmed by the 4.1% drop, and the failure to hold key support, which suggests that the path of least resistance is currently to the downside. The persistent net outflows in the futures market reinforce the bearish short-term outlook, indicating that professional money is actively de-risking. Another cautionary point is the fundamental uncertainty introduced by the developer's exit, which raises questions about the project's long-term execution. Neutral insights suggest that the market is simply undergoing a necessary correction, flushing out weak hands before a potential year-end rally. The recent massive spike in the burn rate, while not immediately impacting the price, is a powerful deflationary mechanism that cannot be ignored in the long term. Therefore, while the short-term risk is high, particularly for a move towards 770 units, the long-term potential remains intact, provided the development team can deliver on its roadmap and the community can maintain its resilience. Investors should exercise extreme caution and wait for a clear technical reversal, such as a close above 793 units, before assuming the selling pressure has ended. The 4.1% drop is a stark reminder that the market is unforgiving, and Shiba Inu is at a critical juncture. The failure to hold key support has put the bears in control, but the underlying deflationary forces are still at play. We are watching a battle between technical weakness and fundamental strength. The next few days will be crucial. Stay alert, stay informed, and watch those key levels closely. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.